Oil prices have turned negative. The most extraordinary development that took place today when the US main blend, West Texas Intermediate, fell more than 306%. You see it on the screen. It is negative $37.63 a barrel. That means producers are paying to get rid of the oil. There are two factors behind this. One is technical, market mechanics, which blend and which futures contract is currently being traded. And the second is supply and demand. There are thin trading volumes. John Defterios is in Abu Dhabi. John, explain how this can be. How can the oil trading contract be negative?
Well, it's a once-in-a-lifetime event, Richard, where, as you were suggesting here, those who are holding the physical oil are willing to pay others to take it off their hands, primarily because we're running out of storage. There's less than a month left of storage, very likely in the United States right now, with better than 500 million barrels already on the market, in the physical market, and there's no place to put it. But I say there's three factors. There's that storage factor. Number two, we know that demand in April and May is terrible, and very likely it's going to be the same thing in June, averaging in the second quarter a demand drop of 23 million barrels. And the third factor that many are overlooking right now, Richard, is that the dollar is rising. So those in the petrostates are feeling the pain even more because of their production of oil and losing income in their local currencies. I've never seen a spread in a month between May and June like we're seeing right now in the WTI market. Been covering oil since the first bust in 1986 and that price war. If there's a silver lining here, if you look at the June contracts and the comparison between Brent and WTI, the spread is $4 a barrel. That's where we'll start tomorrow. But let's not write home and say, wow, $20 to $22 a barrel will solve the problems. In fact, we saw companies like Halliburton or Husky Energy of Canada making even deeper cuts. We're likely to lose 4 to 5 million barrels in 2020 as a result of what we're seeing in the physical market today.